Hey everyone, Jamie Bateman here with Labrador Lending, and today I want to talk about a topic that can be a little bit controversial, unfortunately, and that is the topic of infinite banking or the infinite banking concept. And I want to discuss how we at Labrador Lending use infinite banking to help expand our note business. So I hope you enjoy the video. Thanks. So, what is infinite banking and how can it help you in your note business? Um, infinite banking, in its simplest form, is a philosophy or a process that was designed by Nelson Nash, who's since passed away, um, where you take out a whole life insurance policy. That those tend to be the best tools for infinite banking. And you intentionally set this policy up so that it has a high cash value and a low death benefit. So this is a critical piece, and one reason I think people bash infinite banking or it can be controversial is because they're trying to use a policy that was not intended for infinite banking or IBC, or they were sold a policy that benefited the insurance agent and doesn't necessarily benefit them for what they're trying to accomplish. So it's critical you set up the policy with IBC in mind. That is a piece that people seem to miss. But essentially what you're doing is you're setting up this high cash value whole life policy and you're borrowing against it. Now the crazy part is that policy continues to grow in value as you borrow against it, and that's something that's really different than most other things that you can borrow against. If you take out a loan against your primary residence, take out a HELOC and you use that equity, yes, your property may be increasing in value, but you're really eating into the equity of that property there. So if you take out a loan against your 401k, I've never done that, but I don't think your 401k is growing as quickly as it would have if you hadn't taken out that loan. So that's where the concept kind of blew my mind a few years ago when I finally took the plunge into IBC, was that my policy is going to grow at a pretty consistent rate over time, whether I borrow against it or not. So that's the part that really got me in. But you can borrow against your policy and then take that money to go on vacation, buy a car, whatever you want to do with it. In our case, we're using it to fund our note business. So when you take a look at a note business, ultimately it boils down to three things: finding notes or assets, managing those notes, and then finding money to buy more notes. So at Labrador Lending, we try to put every task in one of those three buckets. Obviously, they're all critical. Deal flow is really important. Asset management is really important. But then finding money to buy more assets is critical. So it doesn't matter who you are, you're going to run out of your own capital. I do recommend newer note investors start note investing with their own money first. But eventually if you're trying to scale, you're going to run out of your own funds and you're going to need to find more money. And this is where IBC or infinite banking comes into play for us. We also use other tools like selling partials, note funds. Managing a note fund is another great way to put others' capital to work and make a good return for them. But infinite banking is a concept that we've been using for a couple years now to help grow our note business. And here's how it works. You have the insurance company, and we take out a loan against the policy, and it's a simple interest loan, and then we actually have the funds deposited into what we call our family bank. It's just a checking account that's an IBC flow-through account, a personal checking account, and then we personally loan money to our business. So we actually loan money to our LLC or different LLC, and this is a structured amortized loan that's formalized and everything. and then we pay back that loan over time. So if I'm borrowing it from the insurance company at between 3 and 5%, I typically will set up a loan from myself to my business at 5 or 6%. And we've been doing these for over 10 years, meaning the loan is amortized over 10 years. But what's really cool is you don't actually have terms that you have to pay back your loan to the insurance company. If you don't pay back that loan, it actually comes out of the death benefit. So there's a lot of flexibility with this. Definitely check out our blog post for more detail. But if for some reason our note business ends up tanking for 6 months and we're just not doing as well as we wanted to, we can actually kind of pause those payments for a little bit, get back on track, and then start paying the insurance company back. So that's one of the cool things about it. I don't think you can do that with most loans. There's a lot of flexibility with it and control. So some of the advantages over other sources of money: flexibility and control, like I just touched on. No reporting. When you go to take out this loan, it's not like you're applying from a bank or anything. You literally just tell the insurance company, I want to take out a loan. I want the funds deposited in this account within the next 4 or 5 days, and it's done. No questions asked. They're actually contractually obligated to lend you that money. And there's no application, no reporting. This is actually something that there's no reporting to the insurance company about what you did with the money or how the investment is performing, anything like that. So no application. And then opportunity cost. When you use your own cash to purchase notes, the cash is not being used elsewhere, so it's tied up. But in contrast, if you use that same cash to start a properly structured life insurance policy, and then you borrow against that policy, in a sense, your dollars are doing double duty. So the life insurance policy that you started is growing consistently over time, and then you're taking those funds and you're growing your note business at the same time. So I found this to be extremely powerful. Unfortunately, this concept is way more controversial than it needs to be, and I think it's primarily because people misunderstand it or misuse it. So I hope you found this video valuable. Like I said, we have more detail in our blog post at labradorlending.com. Blog post is entitled How to Use Infinite Banking to Fund Your Note Business, and we'll have more videos like this in the future. Thanks.